Thank you for tuning in to another edition of the Vulcan Report. Today is Monday, September the 13th. We're getting right into things. Those of you who took my advice and went to the blog at polscan.blogspot.com, you were able to view today's in-play report because I uploaded it on Sunday morning. And as you can see now, I'm just now getting around to doing a video. So anyhow, I just wanted to give you a brief overview of the Google Docs page and what it looks like. Basically, I'm still learning how to do this, so bear with me. Basically, here is the Excel spreadsheet on Google Docs. As you can see, this bar right here to the right-hand side, you can scroll down. It shows the securities here on the left. And you just scroll down, you know. I did it so that the top part right here will stay up, so that you can scroll down and take this bar here and move it over, and you know, page over, without leaving the sidebar here, so you can, you know, keep up to date with what you're doing without having to figure out what column or row is what. So I tried to make that user friendly as possible. You can also download it. I think if you go over here and hit click File, and then you come over here to Download As, and it gives you a lot of options: CSV, HTML, text, Excel, OpenOffice, or PDF. All right, so that you can you know, work it that way if you don't have time to play around with it here. But this is totally user friendly, totally interactive. You can click on and rearrange and arrange things the way you want. It doesn't matter. But what I try to do here is, like on the left-hand side here in orange, I try to go ahead and highlight all of the ETFs. Those are the ones I watch mostly. And then, of course, I highlight in yellow the Forex currency pairs, all right? So that's easy to look at. So that's it. Just the Forex highlighted in yellow, ETFs are in orange, and everything else is either a stock or a futures contract. You know it's a futures contract because they'll say, excuse me, here, like NYMEX Cocoa continuous contract. I always use the continuous contracts for display. If you're going to actually trade those contracts, you need to, when you go in, check and see what the front month is and do it that way. But for spreadsheet purposes and for chart purposes, I always go with continuous contract. Okay. Also, I try to differentiate the actual commodity ETFs themselves. So they'll have the ticker symbol here to the left, and then in the first word we'll say futures. Let me just show you one just so you can see what I'm talking about, in case you haven't already noticed it. Let's see, where did I put one here? Let me just go up to the top. Okay, Joe, right here. See, JO is a ticker symbol, futures, and it says coffee. Okay, so if you don't have a futures account and you still want to benefit on what coffee's doing, you can just trade the coffee ETF. It's just that simple. All right. There's one for the meats. There's one for the grains. Other than the like the double commodity ones right here, like Joe, and then there's another one down here. I can't call off the top of my head right now, but there's several of them on here. They'll say futures first, and then you know that's the futures one. If you want to trade it, there you go. Here it is. BAL, B-A-L, that's the futures cotton, all right? It tracks cotton futures, okay? So you can just go through here and try to find the ones that you want and go for it. I have on here the 1 times ETFs, 2 times, and 3 times ETFs as they come up, as they become available. If there's a signal on it, we'll get it, okay? Not all of them have signals on them, and that's for various reasons, either because it didn't meet the criteria of the algorithm, or because there's not enough data because it's a new ETF that just came out this year. So I need a certain amount of data points before I can begin to do the analysis on it for the spreadsheet purposes. Okay, so I realize that not everything is on here, nor can it be. For those of you who don't know, here also too, if you need to contact me privately on YouTube, you can send me a private message. I don't know if you have to be a friend in order to do that or not, but you can send me a private message. That's cool. Or you can send me a personal email. This is my personal email right here up top. Right here. This is my email address if you need to email me. Do not spam me, and because if you do, I'll just block it. But if you need to talk to me, you want to holler at me regarding trading, or opening an account for me to trade or manage for you, whatever, just hit me up, email. That's cool. Also, I try to make sure that each one of these daily spreadsheets are uploaded 24 hours in advance, and you'll note it says public on the web. Anyone on the internet can find and access, no sign-in required. I can change that at any time and make it so that you have to sign in or register. I don't know if I'll do that or not, because right now I'm just trying to help as many people as possible and trying to make it easy for you to access. So I don't know. Anyway, also when I'm logged on to here, it'll tell me how many users I have and how many people are viewing, and I can scroll down here. You guys can leave me messages about the particular spreadsheet, and I'll do my best to answer it, when I have the time to do so, or when I'm logged on. Okay, you can see here people can leave questions and stuff like that. So it's totally interactive, so I am accessible. You can reach out and touch me. All right. One other thing I want to point out here on the spreadsheet, getting into it. If you see a situation where you're looking, let's scroll down. First of all, I try to organize it so that all the possible pulse waves are on here first. So anything that's a pulse wave is going to come up first. And then after that, anything that's not a pulse wave will show up as an intraday breakout or breakdown. And that usually starts right here, as you can see. So for instance, starting here at Archer Daniels Midland, ticker symbol ADM, you see that there is no pulse wave in any one of the columns, because this is appearing on the sheet as an intraday play or continuation of a breakout or a breakdown. Okay, so you scroll over here. You'll notice when you scroll over here, these are your entry points right here. Okay, either the resistance high or support low. You see here we have a positive bot check that came back. All right, positive PPT on this one. So then you're looking for the $32.77 entry to be in play. All right, and then you can use the $32.19 as your initial stop loss. Okay, on that particular one. Don't worry about entering on the pulse wave, because you're not going to be able to, because it's not in play. These two pulse waves are not in play. If the prior day's close is above this 32 pulse wave resistance, that means you missed last week's breakout. It's already broken out from the pulse wave, so you missed the initial pulse wave. However, you're looking to possibly cash in on the continuation of the uptrend in this particular symbol, and this is your breakout point. Now, these entry points are very well calibrated and calculated. It's based on many different factors, such as support and resistance, looking at market depths, where where most of the players are parking their stop losses, and looking at the strength or the weaknesses of the bids. And these numbers are put here for a reason. So regardless if the pulse wave entry point is a million miles away from the market, that is irrelevant. If you have a pulse wave thing like here, you got to place the tickets. I mean, it's just that simple. It doesn't matter. Just place the tickets. And you will continue to do so until it's filled. All right? Those of you who want to be more aggressive can scroll over here to the side. Whenever you have a pulse wave scenario, you can scroll over here to the side and enter on these two prices here. That's an aggressive play. You're saying, I don't want to wait till the pulse wave. Well, that's fine. You can enter here. All right? That'll get you in early, and if you're right, then you can ride it. Like, for instance, on the Canadian dollar, you can go long at 103.74. If it's triggered today, you can ride it up to the 105.09. However, if it doesn't make it there, then you have to be nimble enough to take profit and get out. That make sense? Okay. So anyway, keep the questions coming. That's all we got today. Let's just take a quick look at the markets. As you can see, this is a chart of the Dow Jones Futures. We gapped up severely on the open. Whether or not this gap will be filled today or sometime this week, we don't know, but the market did break out like that. Usually when we see a breakout like that out of a consolidated congestion, it usually means that there's a problem. There's a problem. Because we were consolidated here. We were trading inside of this bar from September the 3rd, and we did not get a close above that or below it. What we were looking for today, which would have gave us more validity to the rally, would have been to open right around where we closed at and then rally. That's strong. But this is an air pocket. That's weak. It's like building a castle on sand. So that means this breakout today is suspect. I just trade what I see. I'm not married to a bullish opinion or a bearish opinion. I just trade what I see. A lot of you will also notice that today the market gapped up way beyond some of the pulse waves and intraday entry points. Don't worry about that. There's nothing you can do about that. Don't try to chase the market because it looks like it may want to reverse. And if it does it can do it violently. So just be ready to catch the reversal. All right, even if you have to set out today and be prepared to get in tomorrow morning, that's just how it is. Sometimes the markets gap up and gap below. That's sort of like a blow-off top. This could be a blow-off top today, a gap up to finish the rally, and now the market may want to resume and come back down and test the trend line support of 10,273. That's almost a 200-point drop. You see what I'm saying? So don't chase it. Let the market come to you and tell you what it wants to do. If prices gap above and beyond us, that's fine. We're always going to have another opportunity to get in the market and capture the beginning of these moves. So you haven't missed a thing. Just sit tight, be encouraged, and take what you can, give nothing back. Peace.